What's going on out there, good people? This is your boy Look Around with the serious look on my face. Um, Coming at you today with another review. This one here is going to be a red day review, and this is going to be a over trading leads to underachieving video. That's what we're going to call this one. Over trading leads to underachieving. That is what we did today. Took a lot more trades than we normally would take. Sweet spot is 4 to 6 trades. Usually 6, unless we get some pretty good trades in those first 4, or we hit green on those first 4. But otherwise, it's usually about 6 trades is the sweet spot. Today we were in double digits trading, so I'm gonna go ahead and get Trader View pulled up. We'll kind of walk through the numbers in Trader View and kind of look and see what we did. Actually took a trade that the system kind of messed us up on, where I pressed the buy button and I didn't think that it had taken the order, and pressed it again. And then I see all these orders on the active trader, try to cancel them, and it was too late. The system ended up taking the orders and we were in them. Thing to do would have been to either sell at market or sell on the bid, just try to get out of them. But we ended up staying in them. One of the trades made money, which meant that the other one should have made money. But we ended up staying in it a little longer than we should have. And come to find out, we didn't stay in it long enough. So I'm going to go ahead and get Trader View pulled up, and we're going to walk through them. Be right back. All right, and we are back. We have Trader View pulled up for the trades that we took on January 20th. We see here that we took 13 trades, well above our average trades per day, leading to the title, over trading leads to underperforming. If we look at the trades that we took, we started trading right at 9:37. We took our first trade, which was Facebook. Took a $14 loss on that trade. Not bad. Well within our risk. Next trade that we took, we went right back to Facebook, and we got it right on that second one. That was a $41 gain. Next trade, Facebook again, quick $8 scalp. So we're in the green. Next trade that we took was Baidu. We got in Baidu and another scalp trade. We only made $7 on that trade. Next trade, Baba. Quick scalp again, as you see, for another $3. So slowly getting there. Then we take our next trade, which was the SPY. And on the SPY, we were in the green, $42 on that trade. So I'm gonna go ahead and my quick math is not functioning right now, and I don't even want to give that a try. So I'm gonna go ahead and add these up. Negative 14 plus 41 plus 8 plus 7 plus 3 plus 42. So we were up $87 at this point. 10.55. We've taken 7 trades, $13 short of our goal. At the time that I was trading, thought process was, that's a pretty good day. Been in the market a little over an hour. Should go ahead and shut it down. But that little voice in the back of your head came right to mind and said, we could get a nice little quick scalp and make $13 and get out the market today, hitting our goal. So we went back into the SPY again and purchased 2 contracts, and this trade failed on us, and it failed on us big. And we ended up taking a loss of $82. $82 on that trade there. And actually, I'm sorry, before we took that trade, we actually took a trade on BABA. Went back to BABA and we lost $38. So we took this trade on BABA, we lost $38. Turned back around, went back to the SPY and lost $82. We lost $82 on that trade. So now we're in the hole $33. We went from being up 87 to now in the hole 33. So we come back, and this is where it really started going wrong. These right here. We had our quantity set at 4, which made us purchase 4 instead of the 2. And the system didn't take our first order, or so we thought it didn't take our first order. And as you can see, the times on that, they're identical. So Thinkorswim filled both of our orders for 4 contracts. And like I said in the intro, the thing to do would have been to either do a market sale or try to sell on the bid. Just try to get out of them. Might lose a little bit of money, but you're not putting that much risk on the line. So as you see, we did sell this first order and we made $52. And then we had the bright idea that, well, this thing still looks like it has room to go down, which it did, but it had to pull back first. And when trading options, is normally not my routine to sit through a pullback, because as you can see, those pullbacks can be pretty significant. So this thing pulled back to the tune of $122. And at that point, I was like, let me just get out of this trade. I done doomed myself. So ended up selling that contract and got out. So let's see where we're at. So we were up 52 on that one. So we were positive 19. Then we come around and we lose that 122. So now we're in the hole 103 when we're here. Again, well over our average daily trades. And didn't want to finish down 4R. So we took another trade, Facebook, and it worked. We hit our target, made $52. Good trade. Now we're down. What's that? 51. So now we're down 51. Again, we could just say, let's go ahead and wrap it up, down 51. But we look back at the SPY again, and the SPY is looking decent, and we'll review all of these trades shortly. Get back in the SPY again. Let me see if this was a put or got in the SPY on a call. That's what I thought this was. Just poor trading all around. Poor trading all around. Like I said, we'll review that one. So we get in that trade and it turns against us. We got in late. Took another hammer off of that one. 127. So now we're down 178. 178. Go back to the well one more time. This here was a put, our last put of the day. And got out at break even. This thing, it made a move. We moved our stop up pretty much to break even. Came back and hit us and stopped us out. For a grand total of negative 174 yesterday on 13 trades. 13 trades. So we'll go ahead and get Thinkorswim pulled up and we'll take a look at these trades and, as always, see if they were valid trades and just walk through them. So give me 1 sec. I'm going to go ahead and get Thinkorswim pulled up and we'll get reviewing. All right, we're back and we have our charts pulled up. So we will go ahead and start taking a look at these trades independently. So the first trade that we took was Facebook. Facebook was a call play. And we got in this trade at 937. Going over here and find 937 on the chart. All right, so we were getting in on that candle right there on the chart. So let's see here. So as we see, Facebook opened. Nice move on the open. Broke this area of resistance here. And we got in the trade right there. So far, looks like a halfway decent trade other than this top and tail. As we always say, look to the left, look to the left. And we kind of knew we were going to fight with this candle. Took the fight and didn't win. So it came up. It did break it. But first, it didn't really have a decent pullback. So it didn't really rest. And it just made this little short move and then kind of pulled back. And we got out of this trade at 938. So we were in this trade a whopping 1 minute. Oh no, I know what happened on this one. Okay. I know exactly what happened. So we got in the trade. Once we got in the trade, I went and I set my bracket. I set my OCO bracket. One cancels the other bracket. And when I set the bracket, you see this nice pop that the stock made? It made this pop. I set the bracket. So it set my upper limit where I would have wanted the upper limit. So that would have been set up here somewhere. But instead of it setting my stop down here, because the stock had pulled up so quick, it set the stop at $14, like to stop me out if I lost $14. So the stock pulled back and it hit that stop where the stop should have been here. So this trade actually would have worked. It made a move of, if we look where we got in, 325. It made a move up to 327. $2 on a 25-cent delta. So we would have hit target on this. But because I was a little delayed in putting that OCO bracket on, and this thing popped as quick as it did, it set my stop, and I didn't go back in and pull it back down where it needed to be. So that's why this one stopped out so quick. As soon as I looked at the information on that one, it just instantly came back that that's what that trade was. Got in the trade. So usually I'll get in the trade and then I'll set my bracket, because usually it gives me a little bit of time. This one here, it popped so quick that when I set the bracket here, it set my stop here instead of having the stop down there, because it's based on the price that it's at when you set the bracket. So That's why we took a $14 loss on that particular trade. Um, Still wasn't a bad loss. Um, Looking at the chart, decent entry other than that top and tail, um, because that was going to act as a little resistance, which it did on this candle. That's why it kind of came back. But then it caught traction and then finally made a nice little move. And like I said, that was about a $2 move right there. So we definitely should have gotten target out of that trade. Next trade we took was Facebook again, and this was another call. We took this trade at 940. So we were getting in on this candle right here. Basically still playing the initial move. We were getting in basically with a little slippage because we weren't getting in where we should have been getting in at. We had caught a little slippage on it. And we got out of that one at 942. So we got out 942 and 46. So we would have been here up here at this upper area, this candle. And we made $41 on that trade. So as you can see, just that little bit there caused us not to hit target, but we knew that the move was over. So we exited and took our profit instead of watching this thing pull back and then try to make the move. Like I said, trading options, I don't like to stay in for the pullbacks because the pullbacks are hard and heavy sometimes. Even if the stock will pull back and continue to run, it's just watching that pullback. So it's easier. Like this contract here, these contracts was $168 each. Bought 2 contracts. So we were in that trade for what's that? 336. It's easier to just let it pull back, and if it's a nice smooth sequential pullback, buy the pullback and then play the next move instead of trying to take the pullback and then ride it up. Putting a lot of risk on it at that point. But that there was a good trade. We made our money on it. Next trade was Facebook again. And it was another call. This one we got in at 950. So we got in this candle here, which would have been this candle here. A little premature. You want to see the candle that you're getting in on if you're trying to do a buy setup, which is basically a pullback. You want to get in after it breaks the previous high, so the candle of the previous high. So this one here was more so of a bounce. Got in trying to play the bounce off of this area of support, and got in at 950 and we got out at 958. So we got out right there. Again, got out a little early just because we saw this red candle here, and look at what we were coming up against. We're coming up against resistance again. So this was pretty much like a scalp trade. We're just trying to maybe ride it up to the top up here and see what we can get out of it. But once we saw this red candle, kind of put a little fear in us, and we ended up getting out. But you see, it still made the move and pretty much came almost even to that resistance, and then it rolled over. And this one was pretty much trading in a channel. Could have dropped the line right here, and this thing just pretty much traded in this channel until the VWAP caught up and got inside of the channel. And then you see it rode to the top of the channel and came to the VWAP. Top of the channel to the VWAP. Can't really trade that because that's not enough movement. But if this channel is $2 or more, you can kind of just buy 2 contracts and kind of play the channel if you're getting buy setups. If you're getting decent buy setups where the next candle breaks the high of the previous candle. So like on that trade, we would have been getting in right there off of this candle. And if it's $2 in the move, so that's 326, we would need 328. So we don't have $2 in that move. So this wouldn't be a good trade unless you're trying to scalp it. And that's what we did. We made $8 off of that trade right here. Made $8 off of that trade. And let's see, 325, 327. Had we rode this all the way up, then good chance this trade would have hit target because there was $2 in this move from where we got in at. But that was a small scalp, $8 off that trade. And then the next trade we took was BABA. BABA was a put play. Let's go ahead and go to BABA, B-A-B-A. These particular stocks have not really been as productive as they should have been. Say that, speaking of BABA and Baidu, B-I-D-U. Billy is another one. So I think I'm going to probably maybe stay away from these until the market kind of changes. But this one here, we got in at 1010. So we got in this one right here. And this was a put play. Let's go ahead, take a look at it. So as we see, BABA off the open, dropped, pulled back. Let's look at the pullback. Just about half. The pullback is about half of the move. So that was a good pullback. The entry would have been right here. So breaking this candle, which is also breaking the VWAP. And we got out of this trade at 1021 was the first contract. 1021. Wrote that one perfect. Perfect play. Let's see. We bought that contract at $86 and we sold that particular contract at $99. So we made $13 off of this. But here's the kicker on this one. We got in this one at 134. The bottom of this channel is 133. That's only $1. Expectation on this one should have been $25. Sell both contracts, $25, because that's all this move had in it. We couldn't get 2-to-1 on the trade because this didn't have enough room in it. So we got out when we saw it hit coming down to this area of support, which was going to make it bounce back up. So we should have got out of both contracts. We only sold one contract at that time. Then we sold the next contract at 1038. So we sold the next contract here as it came all the way back up to the VWAP. And that contract there, we took a $10 loss on. So we made 13 on the first trade. Had we sold both contracts, we would have made 26, would have been 1-to-1, which is what this trade had in it. Pulled back. We lost $10 on the next trade, and that netted us $3 on this trade. So what should have been a 1R trade and been done with it, because that was the correct area to get out of, we reduced our profit potential on that trade. And that was Baba. I'm gonna kind of skip this real quick just because we got Baba's chart pulled up. I'm gonna go and look at the next Baba. So we played a put the first time. This time around, we took a call. We got in this one at 10:55. So we got in this one here, right here on this candle for a call play. Bring that over. Right there. You can see this on both the 5-minute and the 2-minute. So if I look at the 5-minute, you look at the 5-minute, you got a very small bottom and tail. This thing, it pulled back, came up, rode the channel, came up. This is still not a good area to flip your position and go to a call, because you want to see several higher highs and higher lows, and we see none of that on either of these charts. There's no higher high. We did have, so we came here. This is setting a higher low from that high, and we're getting, I'm sorry, this is setting a lower high. So that's your high. It set a lower high, but it set a higher low. So this was your low. It set a higher low. This one needed to come up here to set a new higher high from here, but it didn't. Started just trading in this channel. So this was not a good area to take a call. Not really a good area to take a put, because you only have $1 in this channel. So we got out of that trade at 11:04. So at 11:04, got out of that trade, and we got out as it broke the VWAP and caught slippage, because the spread on this one was about 10 to 15 cents. So with a hard stop in the system, it's rare that you'll stop out on the ask. Rarely you're going to stop out on the bid, which is low, but it's rare that you'll stop out on the ask, which is where your stop is at. Usually you're going to get caught up in the spread, and that's what happened on this one. And we stopped out for a $38 loss because of that 15-cent spread. If you look at my video, like my pre-market videos, that's why when I'm looking at the option chain, I look at that spread column, because I want a spread that's low, typically less than 10 cents. Typically less than 10 cents, because that's $10. 15, 25 cents. You'll see some spreads that's 50 cents to $1. Intraday trading, those spreads don't work. If you're buying an option to hold it for like a swing play, then those spreads aren't as bad. But if you're buying to day trade, you want a very low spread. And that's why the SPY is so good, because the SPY spreads on options is 1 cent. So where you set your stop at, your hard stop, that's usually where you're going to stop out at. At most, you might take 1 or 2 cent spread, $1 or $2, but you're not going to take $10 or $12 or $15 spreads. So that's the one thing that I need to be more cognizant on, especially if I'm using a hard stop. And I'll use a hard stop if I'm going to be looking at some other ideas. If I'm just managing the one trade, then I'll put my order in to sell, and I'll just have that one order in the system, and then I'll move it along the active trader tree to get out of the trade. And then I usually I won't take slippage because I can drop it right on a line where there's a buyer at when I'm trying to sell, and I can get out of the trade. But on trades that I'm taking that I have that hard stop in, definitely want to look at making sure that that spread is low. But that one there we did lose $38 on. So now we'll go to the SPY. And the first trade that we took on the SPY was a call. We took this trade at 1041. So we would have been getting in on this candle right there. So if we look at it on the 2-minute here, look at it on the 5-minute there, this is a decent little breakout. Decent, not good, but decent breakout. So stock came down, pulled up a little bit, came down, hit the VWAP, came back up through this area, and then kind of just meandered along. We had a bottom and tail here on the 2-minute, and we got in off of that little breakout right there, and we bought 2 contracts. And we got out of this trade at 1052. Let's see, we got out right here and got out pretty much at the top. And if you look, you see where this line came on the chart. So this line wasn't on the chart as we were trading. I put this line on the chart as the day went on. So that's why you don't see it all the way across. It got dropped later on as this area became an area of resistance for other trades. So pretty much came up, we got out as it was pulling back, and we made $42 off of this trade. So not bad, not quite hit our target, but $8 short. Not bad. We didn't have to sit through this pullback, and then it would have made target, but we would have had to sit, what's that, 10? So that was about 10-minute pullback where you would have gave back a good little portion of those gains. But like I said, it still did hit it. But it's easier to get out and then just retake the trade. These contracts, we paid $232 per contract. So we paid $464 for the trade, and we made $42. So almost made 10% on it. And like I said, it's easier just to ride a pullback and just get back in if it makes a nice pullback. This pullback wouldn't have been a nice pullback to get back in because it wasn't a nice, smooth, sequential pullback and then to make the move. And that's why you see it kind of made this move and then it just kind of rolled over. But that one there was a green trade, $42. The next one was back at SPY again. Let's see. Pretty much the rest of these were SPY except for one Facebook one that we got mixed in. So this one here was another call play. We got in at 1101. So let's see where we're getting in at. 1101. So we got in as it was breaking this area. So now we have the line on the chart that this is going to be acting as maybe some type of support, maybe. But got in, and you see it came right here. This is the high of the day. Stock got no higher than that right there. And rolled on over. we got out of this trade at 11:15. This was a trade in our mind. We were like, oh, this should work. This should bounce right here. So we didn't have that hard stop in to stop us out at $25. And that move from here down to there was an $82 move. $82. So instead of just taking our $25 stop and saying, okay, let's just try to find us another area that we can get in, we ended up not sticking to our trading plan and not getting out at our predetermined risk size. And that's when we started over trading and underperforming. So the next trade that we got in were puts. So now, once we seen this one here, little small candle, got decent volume in it. Not quite as big as these, but if you look at those candles, look how big they are. Look at this little candle and the amount of volume that was in it. So sellers was pushing. This candle had good amount of sellers in it. So we took options and we got in at 11:13. We got in this one right here before we were even out of that contract. So we got in again. So this thing had transitioned. It had come down, got a fairly even high, but then it comes here and it sets a higher high, higher low, higher high, higher low. This is in a small uptrend. But then you come here, comes down, and it sets a lower low from this low. But we hadn't transitioned into another trend. So this thing could have come down to here and sellers may have just come in late and then this thing shot up. But if you look, this candle had decent volume on it. So it had sellers galore in there. They was about to start pushing this thing down. Still wasn't a good reason to take the trade though. This one, we had our quantity set at 4 instead of 2. And we were pushing the buy button. Didn't nothing happen. We pushed the buy button again. So we bought 4 contracts, not knowing it, because we once we saw on the active trader the 2 orders in the system, we're hitting cancel like crazy. Cancel. And it didn't cancel the order. And it issued the orders for the block of 4. So that one we got in at 11:13. And we got out of that one at 11:44. So we got out right there. So slight little pullback, came down. And this is where I was saying, this could have just been that the buyer or the sellers had stopped in low. But you did get a lower high from there. You got a lower low now. But then look how it came back up. And instead of setting a lower high, it set this little high here, but then it kept going. Then it pulled back down, finally tested this area, and that's when it kind of rolled over. And we got out of those 4 contracts. And we should have gotten out of all of the contracts. So we got out of the first order, $50. We should have gotten out of the second order and took our $50, and we would have been up $100 on a mistake. Not a good trade. So it's not something to get happy about, but we still are up. We're still up. But we didn't get out of those other 4 contracts. And again, so that other order, we got in at the same spot. We got in 11.13. So we got filled right there. This other set of contracts, we got out the first contracts at 12.35. So let's see where that's at on the chart. 12.35. So we set in them all the way back up to the top. So we got in. Let's see here. 11.30. What did we say? 11.13. So we got in them here. First ones we got out right here. Second ones, we could have even got out right there. That would have been a little bit more money, but we didn't. We're looking at this and we're saying, okay, this thing is kind of trending down and it's coming off of this trend line. So this should keep going down. But it broke that trend line and we got out of them. And we got out of them to the tune of $122 loss. And that's why I said sitting through pullbacks can be like nerve wracking. So it's best to go ahead, sell them right here. If you do get a pullback, you can always come back in and get right there. But we sold right there. And then look what that thing did. Boom. Made the move and came all the way back down to this area of support. Had we held this one more candle, this trade here would have been about $100. We would have made 4-1 only because we had 2 more contracts than we should have. But couldn't take the pain no more. We got nervous. And it cost us big time. So that trade there, we lost $122 on. Again, shouldn't have been in it to begin with. We even seeing that we took too many contracts, should have just got out of the trade altogether. Took whatever the loss was going to be, regrouped, and took the next trade. But we didn't do that. The next trade that we took was Facebook. So let's take a look at Facebook. So at this point, the market is just tumbling, and it's taken pretty much everything with it. So as it starts tumbling, we go ahead and we grab 2 puts on Facebook, and we get in those at 11.19. So we get in those right there. So we look at both the like I said, you can see that these things took a hefty little drop. It dropped from 327 down to 325 in about 10-15 minutes. So came down, broke this area, consolidated over, and we were getting in when that next candle broke the low of that candle there, because these here was pretty much just flatline, almost like a little flag there. And we got in right there. Decent area, especially even if you're just playing a quick little scalp. We got in there and we got out of these at 11.42. But we actually rode these things through a couple of pullbacks. 11.42, we got out of that one, and then the next one we got out at 11.43. So actually, we got out of the second one there. The first one we actually got out down more so along the bottom of this move, not this one here, because these contracts we paid $113 a contract. The first contract we sold for $140. So we made $27 on that contract. And then the next contract we sold for $138. So we made $25 on that second contract because it did pull back up a little bit. This thing still had room, but we made $52. We had still made our target on that one. So that was a good trade. But at this point, we're over trading. We are totally over trading. 4 to 6 trades is a pretty good day. But at that point, we were at what? 9 trades? 1, 2, 3, 4, 5, 6, 7, 8, 9, no, 10, 11. We're at 11 trades right there. Definitely over trading. And kind of showed right there because we started underachieving, making silly mistakes. That one we took was a good trade. It paid us. So the next 2 trades, we were back on SPY again. So pull up SPY, and guess what we do on SPY? We buy calls, 1233. So we buy a call right on that candle there. We buy a call. Let's look at this one. Let's see where we're at. So we need to bring these over. That one was good. So we bought on this candle right here. So this thing was in a downtrend, still in a downtrend. We didn't get a higher high, but we got a higher low. Got a higher high. We still would have needed a higher low and then continue, because you want to see 2 higher highs or 2 higher lows if you want to get into an uptrend, or 2 lower highs and 2 lower lows if you're going on a downtrend. So this thing hadn't transitioned into a different trend. It was just on a pullback from the downtrend. But we bought a call, and we bought it right into resistance. So we bought that right into resistance. And the first call we got out of at 1300, 1 o'clock. We got out at 1 o'clock. So we got out on that contract. Then the next one we got out at 106, which was that contract. Bought it here or here. Not a good buy. Stop should be right there. Take your $25 stop. Call it a day. Even if you don't take that one, and you would have took it right over here. So even if you don't take that stop, you get this little bottoming tail, but it's on no volume. No volume down there. Low volume. When it comes back up, get out flat. Get out. It didn't break. So now you're setting a double top. This thing's going to roll back over again. And that's exactly what it did. If you don't get out here even, or maybe for a few dollars, stop back out $25. Bad trade. Take your loss. We watched this thing run all the way down, and we lost $127. People be like, look around, won't you trade some money for me? You want me to trade your money like that? Negative. I am not gonna be held liable for that one. So this was a humdinger, as they like to say. This was a doozy. What the hell was you thinking? But we didn't deter it. We didn't deter. Ended up taking one more trade on the day as we continued to overtrade. And this one, we bought puts. We bought these puts. Actually, we bought these puts way back here when we saw the error in our ways, and we bought these puts at 1148. So we bought these way back here, and we bought them here on this candle. Let's go back. Let's see where 1148 is. So we bought these puts right here. So this came down, decent little pullback halfway, and we bought the puts there, and we sold these at 1326. So that's why this trade stayed so long, because we got out later than the previous one. So we got out of these on that candle right there, 1326. So we bought them here. Had this little pullback, and it just kind of stayed right there. At this point, let it come down, and we're kind of watching it, and it just kept just teetering with where we would have had our stop at. And then it finally made that move that we were looking for it to make, came on down, and we got out right here, and we got up, or we got out of this one up 4-1 on the money. So we got out 4-1 on our money on that one. And we ended up taking one more trade. We took one more trade. So let's look at this last one. All of these puts kind of hurt, but this one here hurt the most. This one here hurt the most. We got in this one at 1301. So we got in at right here. Let's see, where's 1301? We're getting in right here. Decent little area. Had this little break down instead of a breakout. It's going to be breaking down. So we got in right there, 1301. We got out of this at 1313. Let me come over here. Got out of this at 1313. As this was pulling back up. Right there. Or no, I'm sorry. This candle here. So we got out as this was pulling back up for a $4 gain. And then look at what this thing did. Just kind of meandered along. Never would have stopped us out up there. Tanks down. $3 move. Tanks down. Tanks down. Tanks down. And this is where it finished the day at. That's where this thing finished the day. This particular contract we paid $1.19 for, so $119. This contract finished the day at $8 and some change. So it was selling for $800. We made $4 on it, on that pullback, instead of just leaving our stop there, which was a good stop. That was a good stop. But again, over trading, and we're underperforming. We underachieving. And again, you see it came back up and tested it. Look at the volume right there. Look at the volume there. Decent volume candle right there. Especially as small as it was. But this was done. The buyers had nothing left in them. Buyers had pretty much gave up the ghost. And it showed. This thing plummeted. This was like one of the worst days for SPY. And we made $4 on that trade. And that ended up finishing our day out down 174. And over trading led to underachieving big time, because we totally underachieved yesterday. After 6 trades, we were up $87. That's right there in our wheelhouse of 4 to 6 trades. 4 to 6 trades. Let's go ahead and pack it up. If we hadn't hit our goal, if we're close, that's good. We're in the red a little bit. It's not good, but we got tomorrow. But we ended up totally over trading, and it showed in our P&L. But I'm gonna go ahead and wrap this video up. I appreciate you taking the time. If you are still watching, definitely would appreciate a like. If you're not a sub, definitely would love to have you on board as a sub. If you don't like it, by all means, drop a thumbs down. But if you do, I ask that you just leave a comment letting me know what it was that you didn't like about it, and we can try to improve upon it. Got any questions on my strategy that I'm using, or something that you think might improve upon it? By all means, drop a comment, and we'll see you on the next one. Peace.